Ideas. My name is Neha Vashisht, and today we have Mr. Kranthi Bathini, equity strategist, WealthMills Securities, with us. Thank you so much for joining us today, Mr. Kranthi.
Thanks, Neha. Always a pleasure to share my views on ET markets.
Thank you. I'll just start with my first question for today. Last few weeks have been quite volatile for the global markets due to banking crisis in the US and Europe. Post that, we had the Fed meeting. Can you brief us with the current market situation?
One thing is markets are in a consolidation phase. Of course, this consolidation has been happening from a quite a long time, but market is trying to find some kind of support at 17,000 levels. Right now, the complete the pressure points for the market is the Federal Reserve, the uh, kind of measures they taken to increase the interest rates at a steep interest rates hike that created some kind of unintended consequences on the entire banking system that had a ripple effect on banking system in US and also the domino effect what we witnessed in Europe. But thank God we don't have any such pressure on Indian markets, especially on Indian banking system is concerned. Their Indian banking system is quite insulated, and we have a strong regulatory and supervision by Reserve Bank of India. So the impact with respect to the banking system on Indian banking system is very limited. But with respect to the capital flows and the sentiment of the market is concerned, definitely it had the impact. And what we witnessed is markets are in a completely in a negative territory. And many of the stocks discuss about the advance and declines ratios. But what we are witnessing is many stocks are going to 52-week low levels, and some stocks going till the low of pre-COVID levels. So markets are in a completely in a negative zone because of this issue. But the dichotomy right now here is whether the crisis that got erupted in the US, the banking crisis, are the same kind of crisis which the markets witnessed in 2008. This is the bigger question everybody had in their mind. But I don't think so. The same kind of crisis they are going to repeat like a 2008 crisis, because the regulators and the policymakers in US they're quite vigilant right now. But the current crisis, the steep interest rates hike measures taken by Federal Reserve definitely
Hmm.
have impact on the entire system, banking system in US. That's how the unintended consequences have the impact on the entire financial markets right now.
Absolutely. I also want to know what are the global trends saying right now, despite positive cues from global market. Indices are basically dipping some days it's going okay. So, what are your thoughts on that?
At present, Neha, there is a dichotomy. The foreign financial, foreign portfolio investors, okay, they have been doing some kind of cherry picking some days. That's how we can see some kind of spikes on some days. But most of the time, there is a carry trade. What we are witnessing, some kind of hot money that came into Indian markets that has been getting channelized into different Asian markets in the emerging market space. Like some kind of money has been what we witnessed in last fortnight was some kind of money has been getting into markets like China, and also some kind of money that's supposed to come into my India that's getting into emerging markets, other emerging markets like South Korea. But
Right.
uh, uh, in all this bargain, India offers a better position for the foreign portfolio investors. But the what we are witnessing is the long term, long only FPIs who are long on India. That money has been not going out anywhere. That is getting coming to India. Uh, but
Right.
the long term trends of India remains very positive. But the incremental buying is not coming with respect to Indian markets is concerned in the medium to short term.
Right. So, what do you suggest for short-term investors, like you said, and which sectors they can focus on?
For the short-term investors, this is typically not a market for the short-term investing, Neha.
Right.
The market has been so volatile, but investors still some kind of trading opportunities they can see or they can bet on in medium to short term is the defense offered a defense sector. This is a new age sector that has been emerging. If you see in today's trade, also many of the defense stocks has been going up. Just to name a few, these are not the recommendation, just to keep on their radar and observe the trends for the short-term traders like Cochin
Right.
Shipyard and Garden Ridge Shipyard. These are the companies have been showing the resilience in their patterns are concerned. So defense can be the medium to short-term play for the short-term traders. And also one can think about stocks in capital goods. They have been showing resilience despite of the downturn in the market, despite of the correction what we witnessed in the markets. Stocks like ABB, Cummins. If you have to look at the charts of Cummins, the fundamentally strong company, the stock has given 3x kind of returns from last 18 months, and stock is showing resilience in its patterns are concerned. Like Siemens, ABB, L&T, these are the names one
Mm.
can look for. These are the capital preservators. At the same point of time, offers a decent return to the investors at this point of time. So short-term traders, they can look into the stocks which are in defense as well as in the capital goods.
Right. And what would you suggest for the long-term investors, since you said that right now it's short-term is a little risky and a little volatile, and as we all can see that some days are good and some days are really bad as well. So, what do you suggest for long-term investors?
Long terms, India is definitely a strong stock pickers market. At this point of time, even Neha, one thing that the investors need to think and take into cognizance right now is if the investors who entered recently 6 months back or 1 year back, we have a flood of accounts that have been going up, demat accounts. These are the newcomers coming into the Indian markets post COVID. These people are a
Right.
little bit reluctant because they have not witnessed this kind of time-wise correction and the price-wise corrections. But this for the long-term investors, the new entrants who are coming into the market, this is the best time to come into the market. And investors those have a time horizon of 2 to 3 years and 5 years beyond that. India is the best performing. India is going to be a best for performing markets in the coming days. So definitely, investors can look at with a long-term point of view stocks in the banking and financial services, and also investors in IT. IT has been an underperformer in past 6 months due to the pressures in US and also the news of a recession in US. IT stocks has been in a tremendous pressure. So, but a long-term investors, IT remains to be a sweet spot at this point of time. Also, investors with a
Right.
long-term horizon, definitely they can, in a staggered manner, they can cherry pick the large cap IT stocks. So this is a contrarian view. IT is right now, but in a longer term, the contrarian view always works. But one
Yeah.
thing, one more sector investors can add at this point of time is pharma. Pharma was have been a underperforming sector, and many of the pharma stocks have been at their 52-week lows. Uh, the long-term investors can definitely find cherry pick some kind of stocks, the large cap stocks in pharma also for a longer term basis at this point of time.
Right. Right. So, my next question is that RBI MPC meet is due next month, and as per information, interest rates could be hiked by 25 bps. So now I want to understand what does this mean for the investors?
Right now, as you rightly mentioned before the MPC meet only, you are predicting 25 basis points. But the rate hike can be we can expect from the next MPC meet. As market, what we can sense is market is already trying to discount the 25 basis points that's already factored in the current market trend is concerned. But anything above 25 basis points, definitely it's going to be a key concern for the markets. And we also need to know what is the RBI's stance on the interest rates going ahead, whether this is the peak of the interest rate cycle or we are still in the midst of the interest rates hike cycle. We need to wait and watch. The commentary is very much essential, and also definitely RBI can have a status quo with 25 basis points. Going ahead,
Right.
we have Q4 results and the monsoon. These are the important points one need to take into consideration going ahead to just to see the market to stabilize further.
Definitely, definitely. So now it's time to take some questions from the audience. Um, okay, so first question is asked by Manohar Pamula. So he's asking, he has bought Hindustan Zinc at 340, JSL at 290, and he's asking for a long-term view and just your suggestions.
Hindustan Zinc, of course, has been giving good amount of dividends. Hope this kind of dividend payout can continue over a period of time. But speaking the nature of the fundamentals of the business is concerned, Hindustan Zinc is a good company. If you see the track record of past 15 years, the uh, as the economy tried to take the uptick, Hindustan Zinc is going to take a greater advantage as the steel demand goes. Also, the inherent strength of zinc will go up because there will be a demand for zinc also. Overall, he can hold on to his portfolio with a long-term basis.
Okay. And his second question is that during this time, which is highly volatile, which sectors people can choose for safe investments?
Coming to the safe investments are concerned, okay, the capital preservation is extremely important for the investors.
Yeah.
So the pockets like, as I mentioned, the capital good stocks, especially the large cap stocks, can be the good stocks to hide at this point of time for the investors. And investors with a high risk appetite, definitely they can look into the stocks in infra and also stocks in IT. These are the sectors with a high risk appetite investors. Definitely they can, in a staggered manner, they can start cherry picking these stocks at this point of time.
Right, right. The next question is by Ankshita Chawla, and she's asking for few mutual funds for 10 years for good returns.
Neha, see, any large cap diversified mutual fund can be their choice. I am not here to tell specifically, since she have mentioned a 10 years horizon, which is a very good
Hmm.
decent horizon.
Right.
She can pick up any large cap diversified mutual funds. And also, what I can suggest is, since she mentioned that for a horizon of 10 years, she can probably she can take the large cap stocks which are the proxies to India's growth story. The large cap stocks she can build up on her own also. Since the time horizon is 10 years, she can have a blend of large cap stocks in her portfolio, which is a replica of direct equity to her, apart from building a mutual fund portfolio in her portfolio.
Right, right. So I think we'll not take any more questions because most of them are related, not related to our topic for today. But I would just like to know a little bit about the global outlook, what is happening right now. Just to sum up today's live stream, um, what are your thoughts on the situation for ahead?
Neha, see, we are in a high interest rate regime. Okay, in 1981, the Fed rate was 18%, which was the peak of the interest rate cycle. Right now,
Right.
the given the kind of commentary from Federal Reserve, okay, there is a great saying on Wall Street: "Don't fight with Fed." Okay, but you need to ready to take the views of the Fed and what they're going to do. Whether sometimes it looks like a foolish decision from the Fed, or it's going to be a wise decision from the Fed. But we, as the person in the market, we need to prepare the decisions of the Fed. Because if you see, a year back, the commentary from Federal Reserve Chairman was the Fed fund, the interest rate, the inflation in US is completely transitory. They again mentioned that after a couple of or many uh, uh, interactions, they mentioned that it's sticky. Right now, they're sticking that they're going to bring the inflation to 2%, which is a very, very strong effort they are doing. But it's going to have its unintended consequences on the market, and also it's going to impact the markets in the medium to short term. So one need to prepare the measures taken by the Federal Reserve, and also how they are going to do a soft landing of the US economy. That's extremely essential. Whether it is a soft landing or a crash landing or a no landing, we need to carefully watch. That's going to have an impact on the market. But to conclude our discussion, the measurements taken by the Federal Reserve are the discussions that's taking part with respect to the U.S. banking crisis is concerned. It have a minimal impact on the society at this point of time.
Definitely, and I hope it should remain like that only, and be it should be positive for everyone around the world, and including India specifically.
Definitely, India, we are at a sweet spot, and the right time for India is always today.
Right, right, right. And with that, we have reached the end of our segment. Thank you so much for your time, Mr. Kranti. Thank you so much for joining us on ET Livestream.
Thank you, Neha. Always pleasure to share my views on ET markets.